Fam, today we're going over the window of tolerance and its relation to the Forex market. So let's jump right in. I'm super excited for this video. This is going to be one of the most educational, absolutely mind-blowing videos that we've ever uploaded to this channel. So stick with us throughout the entire video. You are not going to want to miss this. Throughout this video, you will learn multiple different concepts. First, what is the window of tolerance in relation to Forex? How the Forex market is deliberately designed to invoke emotional reactions to get you to make bad decisions. How the Asian Forex session is designed to create a window of tolerance. How London and New York sessions are designed to breach the window of tolerance, inflicting an emotional response. And the real reason behind smart money market manipulation and the three main sessions. You may have heard of smart money concepts. That is all bullshit. Throw all of that out the window. This is actual understanding of how the market works, how the big players think, and exactly why the market does what it does. So, the key to successful trading is understanding mass psychology. Who am I? My name is Dylan. I've been studying the financial markets and human psychology for over a decade. Before Forex, I studied psychology, reverse psychology, neuro-linguistic programming, hypnosis, and much more. My understanding of psychology has led me to a greater purpose of the true nature of the Forex market. So, a great quote that I like to quote is market experts recognize that the true pattern lies not in the market itself, but within the minds of its participants. Throughout this video, you are going to understand exactly what this means. So, what is the window of tolerance? And why is it important for traders to understand this concept? On the left-hand side, you can see a little graph or a little depiction of the window of tolerance. So the window of tolerance is a psychological term that refers to the optimal state of arousal where a person is able to function most effectively. Within this window, individuals can process their emotions, handle stress, and remain connected with the present moment. This is something that even kindergartners learn and teachers learn to understand the emotional effects and trauma and understand how to properly care for a little being that is brought into this world. So I'm not making this up. This is real science. There's science behind this, and we're going to learn exactly how to apply this to the Forex market. So, when someone moves outside their window of tolerance in the context of trading Forex or any high-stress financial environment, several psychological and physiological responses can occur that may negatively impact their trading decisions. So, a few could be impulsivity and overtrading, risk aversion or paralysis, poor judgment, emotional reactivity. I'm sure we've all been there. As traders, we have all been in one of these four categories. Whether you were impulse, you started overtrading, or you, out of impulse, you started taking bad trades, you started revenge trading, you made poor judgment on your decisions, your decision making, you reacted emotionally outside of your strategy. These are all, this is all because we are moved outside of our window of tolerance and into something which is called hyperarousal, which we will get to in a moment. So, In order to understand this concept, we first must realize that there are three main Forex sessions. Obviously, there are more Forex sessions. However, the main three Forex sessions are the ones that we really have to take into consideration. So, Asian session, London session, and New York session. Each of these sessions has specific characteristics. If you've been following us for any time now, you'd realize that we go over thoroughly these different characteristics. If you've taken our courses on Forexia.net, we go through these characteristics of each session and their meaning, what exactly why they form, what is the meaning behind them. So Asian session characteristics, for example, slow and ranging. There's low volatility. It's long and extended, quite boring. It begins and ends at the every single day with a period of consolidation. That's what we call Asian session. We call it Asian session consolidation for a reason. It's because of these specific characteristics. The purpose of Asian session is to keep price in a tight range. Keep the majority of traders in a specific price range. Design a window of tolerance for traders. Design support and resistance levels for retail traders, for the masses. Design the perfect environment for breakout traders. So, the purpose of Asian session. Here we can see two different examples. This is a daily structure where we can see in a 24-hour time period. Each of these charts is a 15-minute time frame, and we can see a large extended consolidation for Asian session highlighted with these red zones. We can see there's low volatility. We can see more towards the middle, the center of the day, there's higher volatility where it breaks out to the upside and to the downside of this consolidation. And so this extended consolidation occurs for a long period of the day, for a very long time. And most of the time, actually all of the time, this is when the majority of people are awake, at least in the United States and in half of the world. It's when most of the people are awake, right? We know London session happens at 2 o'clock in the morning for most people in the United States. And so a lot of people are sleeping during that time. So a lot of people have already taken their trades for Asian session. A lot of people have seen that their support is being respected or their resistance is being respected, so they're taking positions inside of this consolidation. That is key to understand why this happens, because there are a large amount of traders inside a specific price range. The purpose of London and New York session. So, moving on from Asian session, the next session we have London session. So, like I mentioned, it's normally at 2 o'clock in the morning for people that live in the United States. Asian session consolidation, then London session consolidation, which is the breakout. London session is the breakout session. The breakout of the window of tolerance created during Asian session. The next session is New York session. New York session is the reversal session, reversing after breaching the window of tolerance. So if we can see here, we have Asian session consolidation for an extended amount of time, a very long time. The majority of the day, if we count the beginning of the day and the end of the day. Then we have the breakout of that consolidation, which is London session. And if we remember that chart that we saw, let's go back. Here we have this optimal range right here between the support and the resistance. We have that green optimal range. Then the yellow is that breakout. The red is the point of overwhelming. We call it hyperarousal. So if we go back and we understand what's happening in the realm of Forex, what they're doing, those that control the market, those that manipulate the market, those that have created this market, created these specific sessions with these specific characteristics for a reason. We are all emotional beings. As traders, we are emotional. So what happens upon this breakout of Asian session consolidation is that we have hyperarousal, which brings us into a state where these four characteristics can impact our judgment. These four different things happen to us emotionally. So we have impulsivity, overtrading, poor judgment, emotional reaction. Thanks to the pre-created Asian session consolidation, London breaking out of that, because remember, the majority of people that are awake in the United States, for example, a lot of people are trading and they're stuck inside of this range. And not even stuck. A lot of people also have confirmations happening, right? You could see this as a support. You could see this as a resistance, right? So a lot of people are trading inside this range. That's what it's for. It's specifically made to be a tight price range, and then London session is created next to break out of that range in order to make the traders inside of that range become more emotional, be more emotionally involved, and take bad trading decisions. So the purpose of the three main sessions is to cause a state of hyperarousal and emotional imbalance. Here we can see a great little chart or depiction of the little unicorn floaty, just smooth sailing, right, in that tight little Asian range. And then what you see is the dysregulation of that, which causes hyperarousal, the breakout, you could call it, the fight or flight response. Right next to it, we can see an actual depiction of the Forex market. I literally took this from TradingView and I took a screenshot and just put it on this presentation for you guys. I didn't just make this up. This happens on a daily basis. This is real. So everything that I've been explaining throughout this presentation is 100% real. There's no theory about this. This happens every single day. If you have the eyes to see it, you can understand it and you can profit from it. The purpose of the three main sessions, once again, is to cause a state of hyperarousal and emotional imbalance. Here we can see 1, 2, 3 days in a row. And we can see I have highlighted the three main sessions for you, so you can see that almost every single day we have the exact same structure happening over and over, thanks to the characteristics that occur during these three different sessions. Asian session, extended consolidation. Begin the day, and if you don't know what this blue line represents, this blue line represents the beginning of the day and the end of the day, and the beginning of the next day, and the end of the next day, the beginning of the next day. So this is one 24-hour period, another 24 hours, another 24 hours. Inside of that 24-hour period, we have Asian session consolidation, extended consolidation. Then what happens? London session breakout. What happens after London session? We have New York session reversal. So notice how London session breaches the highs. New York session breaches the lows. Then they come back into consolidation, ending the day in consolidation, beginning the next day in consolidation. That's just the characteristic of Asian session. Here we go once again. This isn't a perfect example this day, but we can see the same thing. We have Asian session consolidation. London session breaks out of that consolidation. New York session reverses against it. Then what happens? End the day in consolidation, begin the next day in consolidation. To repeat the same thing over and over and over and over. London session, breakout. New York session breaches the lows of Asian session and reverses. Ends the day in consolidation, begins the next day in consolidation. Here we have another example. Asian session consolidation, extended consolidation, breakout, London session, reversal, New York session. We're just breaching the highs and the lows of Asian session, causing that hyper arousal in traders, generating emotional input that the market manipulators want. The market manipulators want you to make bad decisions. And the entire market, the way that it's designed, is to cause hyperarousal, bringing you into a state of emotional imbalance. Asian session, London session breakout, New York session reversal. Asian session, London session breakout, New York session reversal. Asian session, yada, 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 over and over and over. Here's a nice little chart that I brought up on TradingView. I shared it in our group. If you're not in our Telegram, go to Telegram, find us. You can find us at Forexia, t.me/Forexia. Here we can see a great depiction of 10 plus hours of Asian session consolidation, creating that window of tolerance, breaking out, causing that hyper arousal, Asian session, London session, and then reversing New York session, coming back to consolidate the next day, 10 plus hours of consolidation, breakout, causing that hyper arousal. Remember, there are breakout traders that also just upon impulse see this as a breakout of consolidation, see this as a continuation of trend. Remember that for the future. A continuation of the trend, and then they just take their trades based off of that, right? We see a high, we see a higher high, we see a high, we see a low, we see a higher high, we see a higher low. This would be the higher high breaking past the previous day's high. These are all confirmations for the masses to take trades in the direction that the market manipulators want them to take. So the market manipulator wants you to take the buy in this case so that they can sell off and hit your stop losses. Once again, 10 hours of consolidation, breakout, reversal, get back to hyper arousal, and then end the day in consolidation, begin the next day in consolidation. Asian session, breakout, hyper arousal, reversal, hyper arousal. We're breaching the window of tolerance every single time, every single day, like clockwork. So just like this happens on the daily structure, where we can see the sessions combining, it also happens on the weekly structure and macro. So micro and macro structures. The same way the daily structure combined with the sessions causes hyperarousal on a micro scale, the weekly structure also is engineered to create a similar structure to generate hyperarousal on a macro scale. So we have the daily, this is a 24-hour period, and we have the weekly. This is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. We're going to go over the characteristics. So the characteristics of each day, similar to how the characteristics of each session apply for the micro, the characteristics of each session of each day apply for the macro. So Sunday, Monday, Tuesday is to induce traders to create that window of tolerance, similar to Asian session, which is to induce traders, make them see support and resistance, make them place them in a specific price range so that later on you can manipulate them through volatility. So Sunday, Monday, Tuesday, induce traders. Wednesday, Thursday, Friday is to cause hyperarousal, hit the stop losses, emotional imbalance, bad decision making. Here we can see a perfect example of this. We have Sunday, Monday, Tuesday, Wednesday. We have that window of tolerance. Then we have Wednesday breaking out of that window of tolerance. Thursday creating the high. And then Friday completely reversing. And we see Wednesday, Thursday, and Friday were used to cause that hyperarousal. Not only that, how many traders would see this as a breakout, start buying, and then mid-Thursday, Friday, hit the stop losses of the traders that bought this supposed uptrend or change in trend or breakout. Here's a great example of hyperarousal induced through market structure. This is once again another chart that I literally just took off of TradingView and took a screenshot of it and put it in the presentation. This is actual market data. I'm not making this up. You guys can backtest this when this video is over, and you can see that all of this is 100% the truth. This is not theory. This is not theoretical. This is 100% how the market works. I'm giving you guys the truth and nothing but the truth, the sauce. You will never find this in any other video on YouTube. This is inexistent. This doesn't exist. Nobody knows this. Nobody understands this. Hyperarousal, sweet spot, hypoarousal. I like to use hyperarousal interchangeable with hypoarousal. So we have the sweet spot where Asian consolidation, breakout, reversal. Once again, we see this little blue line indicating the start of the day. The end of the previous day, consolidation. Start of the next day in consolidation. We have the breakout of that consolidation, causing hyperarousal, and then the reversal. Now, if we take this chart that I have here on the left-hand side, and we copy and paste it, and then we flip it, we can see that here we have the chart. We have Asian session consolidation, breakout, reversal, ends the day in consolidation, and we just flip and reverse it, and we see the exact same thing happen. Now, in this case, if buyers are being induced into the market, then the same thing could be said to sellers in this case, where sellers are being induced into the market. What we're seeing here is this same exact depiction just flipped around. So this is, you guys are going to love this. This is absolute insanity. Breakout traders' reaction to hyperarousal. As the price continues consolidating for an extended period of time, more traders view this as an opportunity to take a trade upon the breakout of said consolidation, right? We're taught as retail traders that once you see a resistance and there's a breakout of the resistance turns into support, right? Once the price breaks resistance, the masses believe it converts into support. The masses believe the trend will continue, right? This makes sense, right? At least from the perspective of how everyone is taught to trade. Everyone is taught using the same exact science or bullshit when you start trading. When you start trading as a beginner trader, what is the first things you put into your toolbox as a beginner trader? Sadly, but it's true. Support and resistance, trading the trend. The trend is your friend. I'm here to tell you that the trend is nothing more than a tool used by the market manipulator to manipulate you in the direction that they want you to believe the trend is going to go. Okay? What we're taught is that if you have a low and you have a higher high, you have a high, you have a low, you have a higher high, you have a higher low, you have a higher high, you have a higher low, what do you do here? You buy, right? That's what we're told as traders from the beginning. And it's bullshit. Why? Well, before I tell you why, the buyers that are looking at this resistance turn support and the trend continuation, where are they going to place their stop losses? They're taught to place their stop losses at a specific point in time, right? At a specific structure. They're taught to put their stop losses under the support, under the lowest low. So it would make sense that most buyers would be placing their stop losses under these lows right here. This, if you have point here, point here, point here of the market being respected, this price point, price line being respected, you could see that as a support. So as a retail trader, as the masses, they have a large amount of buyers being induced into this market and then placing their stop loss below this said support level. Under a level of support, the stop losses will accumulate. And then what happens? After traders are induced into the market, the price suddenly reverses in the opposite direction to hunt the stop losses of the induced traders. I'm sure you guys have heard of the infamous stop hunting. There are so many people that will say that stop hunting isn't real. That stop hunting is a fantasy. It's a theory. I'm going to break that theory in half in the next slide so that you guys can, in the next few slides, so you can see exactly how the market works and exactly what stop hunting is and how it works. So here we can see buyers induced through this 3-cycle structure, which combines, just so happens to combine with the 3 market sessions. Asian, London, New York. Here we have Asian session consolidation, breakout London session, and then the reversal. The reversal is after inducing the buyers, the reversal is to hit the stop losses of the buyers. Now, if you flip the pattern can be flipped to induce sellers just like it induces buyers. So, this pattern induces buyers. If we literally just flip it around and inverse it, we have it inducing sellers. And it's the same exact concept. Where would sellers that are induced here, where would they be placing their stop losses? They obviously would be placing their stop losses above the resistance. Right here, we could call that a resistance. Right here, right around here. The market price is consolidating. That's another reason for this Asian session consolidation to exist. This pre-engineered support and resistance helps to maintain the illusion. So, by the same exact concept where we're inducing buyers here, we're inducing sellers in this pattern. Support is broken with these 2 massive candlesticks right here, coming London session, and then completely reverses against the traders that sold into this induction here. And you can see support turned resistance, just like resistance turned into support here. And notice how right after it breaks through the support, in 3 candles, it incredibly fast, just as fast as they induced you, even faster they hit your stop losses. Just as fast as they induced you here, even faster they hit your stop losses here. The same structure is the template to creating a trend. Stay around to the end of this video because you guys will want to understand that. You guys need to understand that this is a series of videos that I'm going to do. This is just one video of multiple videos on this subject or similar subjects that are absolutely mind-blowing. Nobody teaches this. I'm absolutely blown away that I am the only one in the entire universe that has taken these concepts, and maybe it's because I've been through I've studied psychology, reverse psychology, hypnosis, neurolinguistic programming for the past 10 years, and I can understand the emotional bias of traders through market structure. Why this happens. All you have to understand is why. All you have to question is why. And you start to unravel it all. So, you might be questioning or asking, right? Well, Dylan, what pair can I apply this to? This concept is universal. This concept can be applied to any pair. Not just Euro USD, not just the majors, not just gold. Every single pair in the Forex market you can apply this to. Here we can see, once again, highlighting the consolidation in the beginning of the day and the end of the next day. And then we put in the London session, New York session, causing that hyper-arousal. Very easy to understand. And you can see inside of that, we have the cause of the trend. Now, this is going to be my favorite part of this entire presentation. So, clean your ears out, you guys. Get some popcorn. Get ready for this. This is going to be mind-blowing. For those that understand that have been with us for a while, you guys know that my only strategy in the Forex market is the SignatureTrade. The SignatureTrade strategy. This is the #1 trading strategy that I've been using for the past 10 years to trade. Well, about the past 9 years, because the first year I used supporting resistance. I thought the trend was my friend, just like everybody else. Now, thankfully, the discovery of the SignatureTrade is what initially brought me to implement reverse psychology in my day-to-day trading and analysis. So you might be asking, well, how? How did that happen, Dylan? It is because, just like everybody here, we've been taught that, for example, this pattern that you see on the right-hand side, you could call it an ascending triangle, a wedge pattern, whatever you want to call it, right? We've been taught that once you see these converging lines and price converging to a point, that once we have a breakout, that the trend is going to continue. So here we have an uptrend coming to a point, and then we have that breakout. What are the masses taught to do? How are they taught to trade? They're taught to buy into this breakout. So after about a year of being screwed over every single time I took this trade, every single time I tried to take this breakout, I saw so many patterns, so many triangle patterns over and over and over. I thought I was a genius because, I just saw this little chart on Google or on someone's YouTube video, and I was like, hey, that looks pretty easy. I'm going to beat a $5 trillion a day financial market just by using this puny little triangle pattern. I was mistaken, right? Just like everybody else. These patterns are nothing more than inductions to make you take a trade in the opposite intended direction. To screw you over. That's basically it. So let's dive into the psychological understanding behind the pattern. If we set it up, if we see, so this is market structure. Once again, I took this structure from TradingView, just copied it, pasted it on my presentation, and now we can see that we set it up just like we have our little diagram here depicting. And in this case, there are two ways to trade. We can either trade with the masses or go against the masses. The masses are taught to buy this breakout, right? How many people here, comment in the comments below if you've learned something new. Comment in the comments below if when you started trading, you were taught to buy this breakout. I'm sure a lot of people that are watching this video still buy the breakout, and they're like, oh, that's why I'm getting screwed over every time. The masses lose 90% of the time. So we do not want to follow in their footsteps. It only makes sense. That's a fact. The masses lose 90% of the time. 90, 90, 90. The masses will lose, 90% of people lose 90% of their account within the first 90 days of trading. Why is that? Because they all use the same information. They're all using support and resistance. They all believe that the trend is their friend. They all have been taught that this triangle pattern, once it comes to a point and breaks out, you buy it. Once it comes to a point and breaks to the upside, you buy it. If it's breaking to the downside, you sell it. How many people have been taught that? Millions. Every single trader. So, what happens? To understand where the market is headed, we must understand how the masses think. Where they enter the market, where they place their stops, etc. So, understanding that this is nothing more than a buyer induction, where buyers are being induced to place trades simply because of this pre-redacted structure, this pre-engineered structure, that all of this has meaning. And what I'm trying to do is depict this meaning, make you guys understand the psychology behind it. So, we have the converging lines, the support, the resistance, we have the uptrend, and then we have that breakout, right? The reason behind this entire structure that we see here is to induce the buy, make the masses go with the trend. Where are the masses going to place their stop losses? Those that bought anywhere in here, and mostly in here, this was the final induction, they're going to be placing their stop losses below this mostly. So what happens next? Boom! There's a reason behind every move in the market. Your job is to decipher the moves via perceptual positioning. Perceptual positioning is once again a unique term that is used in neurolinguistic programming, which means to put yourself in the position of the perspective of the different participants of the market if you're applying it to trading, right? Normally, this isn't really applied to trading. However, I understand that the market is pure human psychology, and if you apply human psychology to the market, you unveil the secrets of the market. It's as easy as that. So, what do you know? In one single candlestick, all the buyer stop losses are completely demolished. Hit all of these stop losses. This was the cause. This was the effect. So a specific scenario is created to induce a desired outcome. If you guys are enjoying this so far, use code SIGNATURE for a discount on our famous SignatureTrade course at Forexia.net. Be sure to check it out. Anatomy of the SignatureTrade strategy. Okay? let's analyze the market using the three main sessions and characteristics that we've previously discussed. Here we can see the beginning of the day, Asian session consolidation, then the London session breakout, New York session reversal, hyper-arousal, and the day in consolidation. Begin the next day in consolidation, keeping all of the traders in this small little zone, to then break out of it and manipulate them. Break out, causing retail traders to buy, inducing them to buy, and then completely reverse against them, hitting their stop losses. Nothing is random. Every market move occurs with a sole purpose: induce you into a position and then take your money. If we use support and resistance and we start charting this out, we can see 1, 2, 3, 4, 5, 6 times the market has came to this level and respected this level. As retail traders, as the masses, we are taught that the more times price rejects a specific support level, the stronger it gets. That is complete BS. It's a lie. I don't know if you guys now understand that you've been lied to. You've been bamboozled. This is all a big lie. There's a reason 90% of traders fail. I'm sorry. My voice is dying. There's a reason 90% of traders fail. They all use the same information. We have the pre-engineered false support, making you believe that you should buy off of this level, that it's a good level to buy off of, that it's a strong support. We have the Asian session consolidation, creating that consolidation and the resistance above it. We have that breakout come London session, inducing buyers. Not only that, we have the wedge pattern. So there's so many different things, so many different ways you could be induced to take this trade. We have the high, we have the low, we have the higher high, we have the higher low, we have the higher high, we have the higher low. Once again, what is that? That is a characteristic of an uptrend. So in theory, we should just blindly buy into this uptrend. That's how the masses are taught to trade. Doesn't it? Once you understand this, that's the thing. You can never go back. You can never trust the market ever again. You can never trust anyone ever again that tells you that support and resistance is the key to the market. You can never trust the trend ever again. You'll never trust the trend ever again after watching any of our videos. So, if you like trading the trend and you like your support and resistance, leave this video now, because if it's not already too late and I've completely demolished your confidence in the support and resistance, I'm sorry. But I'm doing this this is advantageous to not go with the trend, to not believe in support and resistance. This is all a pre-designed construct in order to manipulate you. Market experts recognize that the true pattern lies not in the market itself, but within the minds of its participants. Hopefully now this little quote is much better understood. The anatomy of the SignatureTrade strategy. Once again, you guys can find more amazing and free content on our Instagram page at Forexia. We have a lot of great little depictions like this where I've literally just taken TradingView screenshots and put little commentated over them via text, so you guys can see exactly how I think. Basically, I've transplanted my brain into the structure of the market, and you guys can understand exactly how this works now. So do not leave yet. I still have one more slide after the slide. If you enjoyed this free content, please subscribe. Also, we have a lot of free content on our website, Forexia.net. You can take our free course, the M&W reversal course. If you want to learn how you can put this concept into theory and start trading it, that's what the M&W reversal course is for on our website, Forexia.net. This was more of a concept and bringing theory into reality type of video, and I don't really go over the entry and exit and all of this good stuff like I do with the M&W free reversal course on our website. Also, if none of this made any sense to you guys because you're beginner traders, feel free to take our beginner course at Forexia.net as well. It is free. You guys don't have to pay anything. If you like this video, subscribe, share with your family, friends, get them on this incredible information. And last but not least, in our next video of this series, we cover the 3-act structure hidden in every story and movie and its relation to the structure of the financial markets. So you're not going to want to miss this next video coming up. Next video in the series. Like I said, this is going to be a multi-part series. This video is about now almost a little over 45 minutes long. The next video probably will be about the same length. I have a lot for this next video coming up. It is absolutely incredible, mind-blowing. So if you liked this video, be sure to give it a thumbs up, give it a like, subscribe, and you'll be ready for the next video in the series. So thank you guys for tuning in. If you enjoyed, once again, give us a subscribe. Join our Telegram where we send free trading signals and alerts, and we have a massive community on Telegram, thousands of traders trading together using these same exact concepts. Just go to t.me/Forexia or go on Telegram, the application, and just type in Forexia. You'll find our channel there. Take care, you guys. Peace out. Thank you for tuning in, and have an amazing rest of your day. Hopefully, this helped you guys understand a little bit more about the financial markets.